Good afternoon. Welcome to the Meltdown. You're listening to Brett Bogus. And folks, I am going to bring you a really interesting show today. Now, I've been off the air for the last 2 months. Apologize for not being there for those of you that were regular followers of the show. But if you have the opportunity, please grab a pen and a piece of paper, take some notes, email me anytime. You can reach me at Brett, B-R-E-T-T, at thegoldexchange.net. Now, some say some say the, T-H-E, goldexchange.net. Now, over the last couple of months, markets have been pretty stagnant. We haven't seen major aberrations to speak of. Of course, the test below $1,300 on the price of gold responded very quickly, and we're now back up to $1,350. Ultimately, it's the volatility in the silver market, overall, all ETFs, and where we see the economy going over the next, say, 3 to 6 months. And of course, as we get into 2014, we're going to really run up against the biggest concerns that Tim Geithner and Ben Bernanke shared, which was the whipsaw and that double dip. It's coming. Now, I predicate some of these thoughts and some of the feelings on what's been going on in Congress over the last 60 days. Of course, we ran right up against the deadline. We went 16 days in, and we shut the government down. As many as 400 to 800,000 employees were affected at the government level. Of those 400,000, and I'll go to the low side, I don't want to be a gloom and doomer, never do that, 70,000 folks filed for unemployment. The government, deciding that they're going to operate their budget in the red regardless, they're not going to pay on the unemployment claims, and they're going to pay the furloughed employees their back pay, the 16 days they were down, obviously less the time for weekends. So we're finding out that the government wants to talk about starting to taper, come off of quantitative easing. The downside of that is interest rates start to go up. And as we've seen over the last 30 days, we're seeing interest rates rise, and the government can't afford for that to happen. Overall, we've got more chaos in the markets. We're certainly dealing with the fallout of Edward Snowden, as we've now discovered over this past weekend, more NSA surveillance on world leaders. Of course, the Germans are not happy about it. We've still not heard anything about the repatriation of gold. Don't forget, Germany wants its gold back. So we're dealing in a situation where we told the Germans it would take 7 years. The downside to that, we don't have the gold, and if we did, we're not going to give it to them. We need the gold. Now, I met with a gentleman just before I went on air. Steve is the gentleman's name, and he came in with a nice collection of NGC and PCGS graded coins. Material that dated from as early as the 1790s all the way through the 1930s. Some absolutely gorgeous pieces. A collector? Absolutely. Somebody who was looking for the nicest eye appeal in material that he could get. And of course, the reason behind his wanting to do it this way is that he absolutely believes that the economy is in trouble and that we're going to see serious problems. Now, I listened to the moderators on Sunday TV. I listened this morning. I get the take on everything. And when you listen to the companies that are trading on the big board, I'm talking about the stock exchange, of course, whether you're talking about a NASDAQ company or whether you're talking about an NYSE firm, companies are absolutely concerned over the figures that are going to come out over the past 30 to 60 days. That obviously gets right up against the 16-day furlough situation. And of course, everybody's trying to wonder what direction we're going to go. We've got problems, and I reiterate it, as we look down the road, you've got to remember that Tim Geithner, before he left office back in January, made it very clear that he and Mr. Bernanke are absolutely convinced that to solve the problems in this economy, the one that we've created through quantitative easing, it's a 10 to 20-year solution. And don't forget, the rest of the world is in quantitative easing. So everybody is producing a whole lot of worthless paper. None of the countries are net buyers. They're all net sellers of precious metals. In other words, they're accumulating gold and silver and platinum, and they're striking different types of coins, and they're charging the premiums that the market will dictate, but that's their profit mechanism. They don't store it. They're not doing anything to back the value of the currency. Now, I can tell you firsthand, you can't write checks forever without having an officer show up. They're going to absolutely clamp down on you for excessive check fraud. Your bank's going to go after you. The people you wrote the checks to are going to go after you. But here in the United States, the government is permitted to operate at those deficits, 16.7 trillion, and that number can escalate 10 times that, depending on how you take the government's accounting into calculation to figure out what's really going on out there. The biggest concern is that, look at foreign countries. We were going to have a state dinner with the president of Brazil. Well, he backed out because we've got problems and we're listening to everything the man says. And so from that standpoint, Brazil has had hyperinflation. They've seen their currency devalued so many times. We know our neighbors to the south, Mexico, they've got the same problem. That currency changes hands all the time. And so when I look at precious metals and I look at the market overall, I see the Dow right back up to 15,600. It's having an up day. But I look at precious metals at 1355, that's the price of gold. I look at the price of platinum at 1478, trading at an 8% premium over the price of gold. Now, that's an important calculation because platinum is rarer than gold. It's 30 times rarer. So this 8% premium is very, very low. I love platinum. The question is, what form are you going to acquire it in? How are you going to trade it? And what level are you going to wait for? Now, I talk a little bit about rhodium. I don't mention it very often. I did have a client who wanted to play in the rhodium market back at $1,600 rhodium, coming off of $6,000. So it's been a few years. We passed on the play because it's too thin a market. And that's what I'm really going to tell you. The markets maintain volatility today, unlike anything that we've ever really experienced. The reason that people move into precious metals and moreover into rare coins is that you get an added insulation that most commodities don't get the luxury of trading in. Now, what I mean by that is that if you look at the commodities market and you trade in anything from plywood to hogs, the markets can change based on the sentiment of the traders, Mother Nature, and Father Time. They all come together, and when they do, it's like a warm front and a cold front coming together up in North Texas, and you don't know whether or not you're going to have thunderstorms. Depending on which one is the prevailing wind, you'll either end up with snow or major tornadoes. My point is that people are supposed to utilize precious metals as a hedge against the other investments in their portfolio. Now, I'm pretty easy about this, and my preface for it is that I want to hedge the hedge. When I came out of college back in the 70s, I always told people, I learned at that time, 5% of your net worth should go into a tangible asset. Now, your home is tangible, but I'm talking about from a liquidity standpoint, something that you can decide in a moment to liquidate. Homes can't sell that quick. So for me, I've seen the markets change. I've seen the change of interest rates, and of course that's got a major bearing on what gold is doing. And I love gold. I see a lot of upside in silver. And so I'm going to talk about Steve in a moment, and I'm going to pull all this together and we'll start to bring it down so it really makes good, clean, logical sense. Gold is an important commodity if you've got a lot of net worth. From a portability standpoint, I love gold because you can hold $10,000 worth of gold in the palm of your hand. And if you had $10,000 worth of silver, you're talking about having to lug about 25 to 30 pounds around, depending on the form you've got it in. So I want to own the least expensive commodity I can get my hands on. At certain times, that may be 20 francs. Those are 1/5 of an ounce gold coins. their gold content, 0.1867 ounces, 5.3 coins to the ounce. That's how you get to 1 ounce to figure out the calculation of what you pay per ounce. But it's the mentality of a lot of gold bugs that there may be a time where you might have to barter with this commodity. Now, I'm not a gloom and doomer. I try to stay in the standpoint of being a realist. And so when you talk about being a realist, you have to deal with inflation. Inflation rises, interest rates rise, people lose their jobs, you can't really fund the economy. So an ounce of gold in that scenario could test anywhere from $3,000 to $5,000 an ounce. I've heard guys like Jim Rogers, Ron Paul, guesstimate that they believe in the next 2 to 3 years we will see a test somewhere between $3,000 and $5,000 for an ounce of gold. That's major league important, and it is more important that you own material that is of a collectible nature. Now, if your stomach doesn't warrant you buying a $10,000 rare coin, follow the logic of a third, and a third, because that's the strategy that has been adopted by so many companies around the country. They got on my coattail. This is something that I've been around the investment community since the 70s. My dad was a bond trader, and I got to look at and see guys that were in their 30s and 40s make phone calls to banks and secure the assets of the bank in the bond market. Now, back in the 70s, it was $1 million. That was a normal transaction. In 1988, for the very first time, I heard $1 billion get mentioned. Now we know the debt, that's $1 trillion. And the Japanese talked about their debt recently. It's been a couple of months, but they hit 1 quadrillion yen. Now, on a per capita basis, that's the same as our debt, a little over 10 trillion. But they are a denser population in a smaller country, and they're still trying to function in QE, and it hasn't worked in 30 years. Anyway, I want to put a third of the money. If you say, Brett, my net worth is X, I want 15 to 20%. That's what financial planners are talking about. That's what, of all people, Jim Cramer, who is truly a stock analyst, talking about owning physical gold. Because when you get right down to it, gold is being gobbled up, it gets dumped on the market, and they force the prices down, they make their money on the short, and then they turn around and start buying it all back up. The problem is getting your hands on gold is becoming a bit more difficult. Now today you can pick up a phone and you can call my store, the Gold Exchange, 281-548-2646. It's 281-548-2646. Hit option 0. That way you get a live voice and you don't get trapped in the phone system. But folks, you can pick up the phone and you can make a phone call and we can get you gold hundreds of ounces, maybe 1,000 ounces. The bottom line is that when the herd turns, when most Americans start to worry and the Dow Jones drops to 11 or 12,000, when you see the price of oil go back to $110 a barrel, when you realize that the world has serious problems out there and you see the market turn, all of a sudden it will be difficult to get it. Now, difficult. In August of 2008, when the housing bubble started to burst, I can tell you that we waited between 3 and 6 weeks to process transactions. My wall looked like it was wallpapered in receipts. You come in, you place your trade, we wait 2 to 4 weeks. When the material shows up, you get the phone call, you come get it, sign for it, and we're done. But I want to own multiple types of coins, and the reason I want to do it is because when Ronald Reagan signed public law 99-185, the legislation dictated, the actual language in the law dictated that the coins are deemed to be numismatic. Folks, gold American Eagles and silver American Eagles. 1 ounce silver, in the form of gold, it was a tenth, a quarter, a half, and a 1 ounce coin. Those 5 coins trade as bullion. In other words, a 1 ounce gold American Eagle today, you're going to pay about 5.5% to 6% over spot, depending on how many coins you buy, because I want to be price competitive. always. But ultimately, if you buy enough of them and you pay the 6%, that's $78, you're trading around 14 and a quarter right now. And ultimately, if gold goes up $100, you make money, and if gold drops $100, you lose money. It's pretty simple. But by owning multiple types of coins and doing it in multiple qualities, you want to substantiate that you're a true collector, even if that's not what your motive is. Own 4 coin sets. Own a few of the better date coins. In 1991, the half-ounce gold American Eagle, the $25 denomination, dropped from a mintage in 1986 of 599,000 plus coins, all the way down to 24,100 coins. And those coins, if you can find the business strike, not the proof coin, there are 2 different ways to make a coin. So if you can find a mint state 65 plus condition 1991 half-ounce gold American Eagle, you're going to pay somewhere between $2,700 to $3,500 in mint state 65 to mint state 69. And if it graded perfect, mint state 70, you might have to pay anywhere from a low of $7,000 to as much as $10,000 to own that coin. It's rare. 90% of the coins in 1993 had been given up in the form of jewelry and gift giving. So it's from that standpoint that that coin is now very, very rare. Less than a couple thousand of them probably. So I like old coins. I like new coins. I want to own lots of different types of coins. When we look at silver, I want to own silver American Eagles and Maple Leafs, and I want to own some bars. But ultimately, I love Morgan silver dollars and Peace silver dollars. Now, these are original silver dollars that were made for circulation. They started striking them in 1878. They made them all the way through 1935. Peace dollars, 1921 to 1935. The 1921 is a valuable coin. The 1928 Philadelphia, a valuable coin. And there are a few of them that are condition sensitive. In other words, you can just own a 1921 and it's probably worth $75 to $100 every day, all day. Depending on the quality, you can spend tens of thousands of dollars. And so building the portfolio around a third, and a third is as simple as saying, Brett, I've got $20,000 to work with. How would you spend it? Well, certainly it depends on your age, depends on what your goals and objectives are. But I'm going to take about a third of that money and I'm going to put it in a mix of inexpensive gold and silver and maybe even a small piece of platinum. The second third is going to be semi-numismatic. And what that means is that you're going to pay some rarity premium. You're going to own some coins like a Mint State 63 Peace silver dollar graded by NGC, a coin that you're going to pay in the neighborhood of about $60 for. It contains 0.77 ounces of silver, but based on it being third-party authenticated and graded, the coin's going to date probably 1922 to 1925. Dates are going to be my choice and the mint marks, but ultimately you get a nice uncirculated coin that's been third-party graded. The grading companies have no bearing on the market. All they do is authenticate and grade. But you own a few of them because when silver dropped from $49 to $32, if you had just owned the cheapest silver, you could have owned old dimes, quarters, and half dollars made from 1964 back. Those coins were all 90% silver. It's an inexpensive way to buy it. But you could have bought a 1 ounce, 5 ounce, 10 ounce, 100 ounce silver bar. You could have bought anything in the form of silver American Eagles or silver Maple Leafs. All of them lost value when silver dropped from 49 to 32. Silver dollars, on the other hand, appreciated. And that's from as little as $2 to $4 to higher prices depending on the value of the coins. So I want the second third to be in coins that are semi-numismatic. The benefit comes in several different ways. And the first way is that when you're trading in numismatic coins, semi-numismatic, you don't have to pay an exorbitant premium. In other words, if you were buying enough quantity and the price was, say, $59 a coin, that doesn't mean that you're paying $59 for a silver dollar that's worth 25 bucks. It means that you're still paying a nice, tight spread. Commission may not be more than a few percentage points on it, but ultimately you're owning multiple types of coin and you are insulating the portfolio from confiscation issues. Now, confiscation. Confiscation deals with the fact that back in 1933, when President Roosevelt confiscated gold, people who were collectors didn't have their gold confiscated. Now, silver was exempt. There wasn't really any superior silver confiscation moves. At the time, we had 10 billion ounces of silver. It wasn't where we saw the value of money, and President Roosevelt limited and eliminated private ownership of gold. You couldn't buy it from 1933 all the way through 1986. It was illegal to own it. So during those years, collectors were absolutely the smartest of all investors because they were able to acquire true rarity at a very big discount. They were collectors, so they didn't do anything wrong. They followed the rules, and that's what we're going to talk about. I don't want to break the rules. I don't want to even bend them. I want to make sure that what I'm suggesting to you is clear, concise, and logical. So we want to own different types of coins, and you can own new coins as well as you can own old coins. I love $20 gold pieces. Back in 1998 and 1999, I built the very first set of certified $20 gold pieces ever. Now, that's a set of coins representative of each date and mint mark. The proofs were not part of the entire package, but there were 150 coins dated from 1850 to 1907. It did contain the 3 proof only years. That's 1883, 1884, and 1887. They did not make a Philadelphia business strike coin. So we had this complete set. We spent about $3 million to do it. Client is a gentleman up in Washington State. When we first started, he wanted to do something that no one else had ever done, and so that was the way our conversation began. And over time, we accumulated this set. Now, unfortunately, the set was broken up, but had the set stayed intact today, where coins that were finest known, and in some cases the only one known, today there are multiples of that one-digit coin. And more coins came on the market, and the prices went up between 8 and 10-fold. Today that set would be worth somewhere between 15 and 20 million if you could even assemble it. And that's the whole point. The final third of a portfolio is in rare coins because they're not as volatile as the common coins. So I want to balance out. I want to hedge the portfolio. I want to make sure that if you want to own some inexpensive gold, and gold's trading at $13.55, you're in somewhere between $14.10 and $14.20, the price of a 1-ounce gold American Eagle. But to that extent, I want small coins. It depends on what your net worth is and how many dollars you're looking to protect. I am certainly somebody who knows firsthand you cannot put cash in your safety deposit box. It's illegal to do it. Not that you're telling your banker, but I'm telling you, definitely don't tell your banker. The perception of legal tender is where this comes to. And if you own U.S. minted coins, putting them in your safety deposit box is not always the best choice. I love having a safe. I would tell you to anchor it into the floor. There are lots of good locksmiths that will do that for you. And ultimately, wire it up to your alarm system at your home. If you have a business, put it there. I've got clients who do that. But in building the portfolio today, because the price of precious metals is so low, now I'm basing that on where I saw the market in 2011 when the price of gold went over $1,924 an ounce. I remember silver almost made $50 an ounce. Platinum, over $2,000 an ounce. It's a bargain under 15. And ultimately, it is a proper mix of material that allows you everything from barter to just being able to sustain yourself in a serious time of economic turmoil. Now, when I talk about economic turmoil, I'm talking about in Egypt when they filed and shut down the banks for a week. They took a bank holiday. Talking about last year in Cyprus when the banks shut down for 2 weeks. And people were absolutely pushing and shoving and trying to get into the banks to get a few €100 just to be able to function. Now, it goes without saying that in a time like that, people were leaving Cyprus. Matter of fact, the Cypriot ambassador in Russia went to the Soviets and asked them to bail out Cyprus. They wouldn't do it. And Cypriots were getting on airplanes and leaving the island of Cyprus, trying to go cash and use their credit cards to get euros. Folks, you may not be aware of it, but when you swipe a card in any terminal, you go to the girl and you're buying your dinner, your lunch, you're buying something at one of your favorite department stores, when they swipe that card, you show up on a computer screen and your bank is watching the transaction. They know who you are and what you're supposed to be doing. Ultimately, that's why you've got companies that are worried about identity theft today. Cypriots were prohibited from pulling euros off their credit cards if they left the country. They were limited to the same amount of euros as they were going to get when they were staying in Cyprus. It didn't work to leave the country. You couldn't go somewhere else in the world and get more money. It wasn't happening that way. And merchants, whether it was a restaurant or anybody else, they wanted hard currency. They wanted something they could rely on. So my point in bringing all this up is to tell you that people have different objectives with their money. You may have real estate. You may own vehicles. And rare coins are one of the strongest areas that you can put some of your money in for a period of anywhere from as short as 2 to 5 years on the near term. Sometimes you go 20 or 30 years. People use it as a great tool to enhance education for their grandkids. What's rare today will be more rare tomorrow. That's the theory. Now I can tell you, I just sent off an 1895 New Orleans minted silver dollar. And I can tell you that I remember 8-9 years ago when that coin in an AU58 holder was only worth a matter of about $300 to $500. Today, an NGC or a PCGS graded coin will command $6,000. And so I'm really encouraged that I had one. I know the coin is definitely not uncirculated, but we'll see what the grading company thinks. If that coin came back uncirculated, the amount of profit that it would have generated in a very narrow window, 10 years or less, creates a lot of profit. Now, the downside of that is that things cost more today than they did 10 years ago. We all know that's the case. Pretty much. There are certain assets that you can still acquire. But my point is that when you diversify the portfolio and you decide to get into precious metals, if you put all the money into the cheapest gold or the cheapest silver, you're taking a crapshoot, just like any other investor would. The only guarantees are death and taxes when you do something like that. It's the added protection and the hedge that you get when you get into rare coins and precious metals that you want to take advantage of a lower price in gold or silver. I agree with that. But I can also tell you that the Morgan silver dollar market or the Peace silver dollar market has a lot of collectovestors. Exactly, a new term. Collectors who are investors. And so you want to put coins in books and you want to have the appearance of being a collector, because that's what Ronald Reagan said when he signed the law in 1985, authorizing the Treasury to start making gold and silver coins again. Now, in 1997, platinum was added. The government has talked about adding palladium. However, it's a much harder metal. It's more difficult to work with. And as of yet, I have not heard of a palladium coin being struck. But that having been said, if the coins are graded by NGC or PCGS, you get to find dealers that deal on the CCE exchange. That's the Certified Coin Exchange, CCE. And ultimately, we're able to find bids and make coins liquid at all times. Depending on how you build the portfolio and what your goals and objectives are determines whether or not you balance the portfolio at a third, a third, and a third. I've got clients that go 40% in the cheap, 40% in semi-rare, and 20% in the rarest of coins. Personally, I love coins that are rare. I'm 54 years old. I'm playing for a game down the road, 15 to 20 years. And ultimately, I love rarity. I understand the rare coin market. I understand it enough to tell you that very prudent investors, people with a lot of money, are starting to move into rare coins. And I can tell you firsthand that we had several world records broken this year, none the least of which is a coin that traded for over $10 million. It's a $1794 specimen. That means it was one of the very first coins struck. Of course, they didn't make a lot of them anyway, but that having been said, the coin 2 years ago traded for just over $7 million. Those are the kinds of profits that are available when you talk about the kind of wealth that's being accumulated today. I can tell you that I've seen stats where 1% of the wealth in this country is contained and owned by 20% of the people. That's a lot of money. And ultimately, we, the middle class, are being squeezed out. I talk about Rick Santorum's statements when he ran for president. The market is starving people out of it. You're either a have or a have not. And so for me, I don't mind gold. I like it. I like it in multiple forms. I love modern issue coins, and whether those are commemorative coins, whether they're coins that were struck in $20 gold piece size, it doesn't matter to me. What matters is that I maintain a balance and that I maintain liquidity. Now, I love $2.50 gold pieces. We'll go to the other end of the scale. Those coins that were struck from the 1840s all the way through, let's see, I guess the last $2.50 gold piece was struck in 1929. And ultimately, these are coins of the realm, legal tender. You can build a 15-coin set of $2.50 Indian gold pieces. You can do it from an average of about $200 a coin, not including the 1914 and the 1911D. Those coins are the keys. And the 1911D in any grade is going to command thousands of dollars. But ultimately, you can spend several $1,000s on a set of 15 coins. You can spend as much as $50,000 to $80,000 on the 1911D or the 1914 Philadelphia in Mint State 65. I remember those coins when the first Mint State 65s were graded. I had a friend of mine that worked with me in New Orleans. We were absolutely enamored that these coins had been graded. They commanded a lot of money. Over the last 20 years, more of them have been graded, and they still command that kind of a premium. So you didn't make any money, maybe, but you know what? You didn't lose any. And that's just as important in a market like this one right now. I can tell you that of the 3,500 public companies that trade on the board, there are going to be a lot of winners and a lot of losers every single day. And depending on your money manager and how you separate out and balance the portfolio in other areas, may be a day that you want to hear from your broker. It may be a day you don't want to hear from your broker. This is wealth protection. And the reason that people buy coins and precious metals is to protect their dollars. It's the hedge. I'm just going to hedge it a little bit more. Now, I get a lot of statistics. There are certain stocks that I do love. Microsoft, I know Bill Gates is celebrating his 58th birthday today. I guess that means that we're almost close in proximity in age. I'm almost 55. Ultimately, Mr. Gates is at a company where the stockholders are ready to see him go by the wayside. Frankly, I don't think Mr. Gates is ready to do that quite yet. But ultimately, the ups and downs of financial planners and money managers trying to decide what company they want to buy into, which one they want to move, that's all part of this. And so for me, I'm watching the markets. On a day where the dollar is up a couple of cents, the euro is trading up with it. And that's not the norm. Normally, you would see it down. And so there are a lot of currencies that are down today. And so as you look at the whole picture, I'm not telling you to buy cars. I'm not telling you to buy paintings. Those are other markets that require other expertise. In this market, I can tell you that you can buy about 60 ounces of silver to an ounce of gold. That ratio, normally, historical average is somewhere around 16 to 1. At 60 to 1, I love silver. I love silver so much that I tell my clients to buy a mix of date sets. Build an entire 96-piece set of Morgan silver dollars. Now, here's where you have to have somebody who understands the market. The 1893 San Francisco Morgan silver dollar is the key date. In the worst grade that you would never want to probably own, you're still going to spend $3,000 to $4,000 to own one. In nice high grade uncirculated, you might spend $1 million to own one. The difference is, of the 96 different coins that make up that set, 30 to 40% of them are going to be the least expensive $35 to $40 coin. Then you're going to buy some coins that are going to trade anywhere from about 45 to 50 to as much as a few hundred. Even a silver dollar that costs $300 might be a coin that I have to pay $280 for. The spread is still tight, 6 or 7 percentage points. It's not an excessive markup. It's the value of the coin. Now, I'm going to come into about 90 GSA silver dollars. They were discovered when President Nixon was in office. And the GSA, the Government Services Administration, sealed the coins up, put them in a nice box, got a certificate of authenticity, and they auctioned off what was close to 3 million silver dollars. Of those silver dollars, an uncirculated silver dollar would have sold for about $30 to $35 back in the 1970s. Lots of them were sold off. Well, I've got about 90 of them that are headed in from a client up in Wisconsin. And ultimately, those are coins that you're going to pay somewhere in the neighborhood of about $230 to $250 for. The box and papers are included. The coins are going to be, we call them baggy, because remember, back in the day, silver dollars were dropped in bags of 1,000 coins. So they were, quote, baggy. But they're uncirculated. There's no doubt about it. They were found in the vaults at the GSA. They marketed them and they sold them out there. They're good-looking coins, nice and white. If you're lucky, you'll find one that's got some toning on it. The layperson would call that tarnish, but we call it toning. So you can buy silver dollars in that price range, and that's going to take about another 30 to 40% of the portfolio. The last part is the rare part, the 1893 San Francisco rare coin. If you go to an 1895 proof only, that coin in any grade is going to command 20 to 25,000 and up, depending on the quality. So I want to bring coins to a market that has people interested at all levels. Now I'm going to bring Steve back up. Steve is a gentleman who was in the store just before I went on the air, and I looked at his coins, and he had everything from large cents to $20 gold pieces. And the coins were attractive. His questions of me were regarding what I thought about the grade of the coins. And folks, I can tell you what I think. It's an opinion. It's the opinions of the grading companies that really matters. But this is a gentleman who took the time. He had a plan. He's buying high-end, good-looking material. Ultimately, we talked about a strategy about how he should go about submitting them. And I told him that that was a great strategy and something that he ought to do. Now, I always tell people to get their hands on a red book. And the red book, the U.S. Guidebook to Rare Coins, is something that comes out annually. It's pretty much out of date as far as the pricing values go when it's gone to press. But that having been said, when you look at the coins, you can determine how many coins were struck in business strike or in proof. That's an important figure. People really depend on it. The 1916D Mercury dime is truly the rarest of all the Mercury dimes between 1916 and 1947. Ultimately, the quality will be the next factor that must be considered when you consider that coin. So for me, I want the red book, and I want the red book so that you can learn about the history, so you can read about the coins and understand what we're looking for and why we're looking for the things that we look for from a standpoint of eye appeal. what you like, what you don't like. And then based on the numbers, not that the numbers are the final decision maker, but you don't want to look at coins that trade for $5,000 or $10,000 if your budget may only be $5,000 or $10,000. So strategy comes into play. And I want to be able to talk to folks. I want you to be able to send me emails. Now you can email me again. That's Brett, B-R-E-T-T, at thegoldexchange.net. I don't care what the question is. If you don't know the answer, it's a legitimate question. I want to answer it for you. But the Red Book will help teach you about the history of the coins, the weight of the coins, all of the factors. Most important, it's what they look like, because nobody wants to collect something they don't like. Now, you can buy coins from the colonies. There's history there. One of the coins that Steve had today was a colonial piece dated 1787. I liked the coin. It was beautiful, but it's just another coin. And so that's what I'm going to tell you. When I'm talking to collectors and investors, the collectovestor, I want to strategize. I want to keep you focused in areas of the market that if something happened to you, your spouse, your children, your grandchildren would be able to deal with the same types of coins and get the same fair treatment. And folks, that's an important factor. There's lots of people to deal with out there. And ultimately, most guys have lots of opinions about this. Looking at a coin, that's a factor all into itself. But when I can tell a client, you can either buy this $20 gold piece and spend $3,000, or you could buy this $20 gold piece for the same $3,000. This one might have a bit better quality. This one may be 1,000 times rarer or 20 times rarer. And if you don't have to pay the premium for the rarity, maybe somewhere down the road you'll get to pick it up. And that would be a 20-fold premium that you didn't bank on when you went into the market in the first place. That's what a third, and a third is designed to do. It's designed to maintain liquidity at all times. You can always come back into the store and always know that you're going to be liquid. Owning coins that other people want, that's paramount. And that's why there are auctions. That's why there's online shows. That's why you can go around your own personal towns and you can see the material for yourself and make prudent decisions. What I get to bring to the table is almost 30 years of experience in the industry and looking at coins from a perspective of what people like, what you like, but what will draw the biggest appeal down the road. Because frankly, it isn't today's money, it's tomorrow's money. Your goals and objectives truly do matter. There's no doubt about that. I don't want to have you tell me, Brett, this is something I want to be liquid for in 6 months. I'd rather not do the business with you, to be quite honest. This is a time where you've got to take and measure up the economy and where companies are absolutely at each other's throats to survive. The economy sounds really good out there. Some days you can drive by the mall and the parking lot is full. But there are other days where you listen to your neighbors and you know that they're losing their jobs and you wonder, what are you going to do next? Those are my concerns. And so taking some of these funds and moving them around in such a fashion that you maintain liquidity is why you own inexpensive gold and inexpensive silver. If the market goes up, you made some money. If the market goes down, you lose some money. The upside in gold is less than 50%. The upside in silver is almost 150%. Those are great plays. And so right now I'm weighted a bit more to silver than I am to gold. I love both of them. And I want to own different types of coins. And that's what made Steve's portfolio so interesting. From a colonial to a large cent, he owned a 2-cent piece. He had bust coins. Those are coins that were made in the 1790s through the first part of the 1800s. He had a beautiful large cent that was dated in the 1830s. I loved his silver dollars and his half dollars that were still dated in the 1790s. And that's my point, folks, is that there are coins that you can own that are pushing 215 years old, and you're going to spend less than $5,000 to own them. They're going to have enough detail that you certainly can tell what it is. And that's an important factor too. There were seated dollars. He had barber coinage. He had some commemoratives, and I love commemoratives. The state of Texas was commemorated in a half dollar from 1934 through 1938. 13 coins makes a complete set. They made one coin in Philadelphia in 1934. And then for 35, 36, 37, and 38, they struck the coins in Philadelphia, Denver, and San Francisco. Now, it was a commemorative coin. Ultimately, they were truly set back, and they come in very high quality normally. Some of them in lower grades, you may pay $50 to $150 for. But when you get to the monster grades, you're going to own coins that trade from anywhere from about $800 to as much as $8,000 or $10,000 per coin. I've seen Mint State 68 Texas half dollars that have traded for upwards of $30,000. There's one Mint State 69, and that coin really, I've never found it. I hope one day to find it. But if you visit the meltdown.com, we've got banners that we share with some of the other platforms. Texas Commemorative, texascommem.com. There's a video and a little clip that talks about the different half dollars, the different types of currency that were struck. There's bonds that were struck from the government and the Republic of Texas. There's a lot of different history when you start looking at this commodity. And so it's from that standpoint that I want to advise you and guide you. Tell you when to buy, tell you when to sell. Understand what you're really trying to focus in on, and if there are things that you're looking to build your estate with to pass on down the road, that would be another area of the market to consider. All of it to say, when you get your hands on a red book, the red book will talk about coins. It doesn't get so much into currency. It gets into the commemorative series that are more modern. They made commemorative coins starting in 1892 and made them all the way through the 1950s. 144 pieces to be exact if you include every date and mint mark. 142 coins are 50-cent pieces. One Isabella quarter, 1892. One 1900 dated Lafayette dollar. Otherwise, you can build the 50-piece typeset. And ultimately, of the 13 Texas coins, you only get to own one of them if you build that set. But there's a lot of history in them. And ultimately, when the coins are third-party authenticated and graded, dealers are capable anywhere in the country, some of them anywhere in the world, where you can hone in on the coins that you want, own coins that other people are going to want. And that's where you get into the expertise of dealing with somebody who's got knowledge. Now, knowledge. Let's talk about knowledge for a moment. I can tell you that when a coin's graded by NGC or PCGS, that I can make a market in it, period. Ultimately, there are coins that just made the grade and coins that just missed the next grade. It's important to understand those differences and why certain coins trade at the levels they do. There is eye appeal. And eye appeal is a factor that you cannot put on a piece of paper. Dealers will pay exorbitant premiums. The end user will pay even more money. And I can tell you firsthand because I owned two 1920 Pilgrim half dollars. And ultimately, one of them was a nice blast white coin. The other coin had bullseye toning. It was a gorgeous piece. And ultimately, the dealer that looked at it paid 3 times more money for the toned coin than the untoned coin. There's advents out there. You can look at online auctions all day. Ultimately, people can ask anything they want. It's the realization that certain coins will command the premium and other people will be more than willing to pay the premium. And folks, that's what I like. I love owning coins that date in the 1880s. I think they're really exciting. But when you get right down to it, it's the trading of that material that makes the market. Bill Gates could start liquidating his Microsoft stock and start accumulating billions of dollars of coins. Problem is that if he started to sell the stock and the market wasn't ready for it, the stock would lose value, although the coins would go up because the coins were disappearing from the marketplace. And that's the most important thing I can tell anybody. At any given time, if the market is a couple of $1 billion, it's a very thin market. Billions sound like they're big numbers, but to the investment guys, it's not a lot of money. And that's my point, is that you can own different types of coins and different qualities, different companies that graded them, and you can sit the bill and make sure that you prove that you are a collectivestor, that your motive is to collect. It is not to manipulate. You are trying to protect your assets, and Rare Coins provides one of the strongest ways to secure money down the road. It's critical. It's important. It's something you should do. Now the question is, do you like silver coins or gold coins? In the case of Steve, Steve had a wonderful mix of everything, from 1790s dated material to coins that dated in the 1930s, and he owned a little of everything. He owned copper, he owned silver, and he owned gold. It was a great balance, but ultimately, for me, I want to hone in on 2 or 3 areas of the market. There's about 9,000 different coins, and they come in 20 different grades. So you're talking about a market that's almost 180,000 across. And then you've got the depth, the amount of coins, billions of coins. So the market is not easily manipulated, and we're not talking about manipulating it. We're talking about staying focused in an area of the market that other people are going to want to be vested in. And ultimately, that's where I come in. I love silver dollars, and I'm going to follow the trend. I'm going to make sure that I tell you when to buy and when to sell, what other people are going to be looking for, what other companies are promoting, because there's nothing wrong with riding on the coattail of a bigger marketing company and just being smart enough to pull the trigger and get out of the marketplace. That's pretty simple. Now, as we get near the end of the show, tomorrow I'll talk more about the proven reserves. I'll talk more about ETF plays. You've got to understand that there are big banks involved. And when I talk about the big banks, I'm talking about JP Morgan Chase. I'm talking about Deutsche Bank. I'm talking about Scotia Makata and the positions that they're holding and what they're taking and what they're doing with it. Now, folks, this is important stuff. And if you've got questions, I would beg of you to please email me. It's Brett, B-R-E-T-T, at thegoldexchange.net. You can call our store toll free. It's 877-705-2646. It's 877-705-2646. I've got sister companies. When you come onto the website, go to the banner ads. If you've got questions, feel free to call or email me anytime. Now, ultimately, owning different types of coins, I didn't get into a lot of gold. I'll talk about gold tomorrow. And I'll cover everything from the newly minted Spouse half-ounce gold coins all the way down to gold dollars. There's even California fractional gold, and I'll talk some about that. And understand that these are times where you really want to focus on and find one person willing to get involved and talk about different things that you're going to absolutely want to be a part of. It's from that standpoint that I'm going to encourage you to reach out and understand that when we talk about coins, we talk about PCGS and NGC graded material. We talk about other types of bars and the other forms that they come in. I'll talk about disclosure issues. I never want to get off air, and I've got a little bit of time left. I always want to talk about the Downs Clinic and the Ronald McDonald House at Texas Children's Hospital. Now, we've had donations that we've links built for our website. And if you're looking for somebody to make a tithe or an offering to, I love the people at the Downs Clinic. Dr. Ostermeyer has a separate facility off the TCH building now. It's grown and it's very active. But if you're looking for someone to donate to, please feel free to go to the donation link. You can go online anytime. The information is totally anonymous. They don't provide me with the names, the addresses, the phone numbers, or the amount of money that you donate. I also love the people at the Ronald McDonald House on the 4th floor at Texas Children's Hospital. And if you're at a place where you can provide a hot meal, please call 832-824-8600. That's 832-824-8600. If you're looking to be able to provide a tithe or an offering, feel free to give them a call. They would certainly be more than willing to assist you in any way that they possibly can. And I appreciate the people at Texas Children's, the doctors, the nurses, the staff, and of course the volunteers. Now folks, if you've got questions and you'd like to email them to me, I'll be more than happy to address them tomorrow. Email me, Brett, B-R-E-T-T, at thegoldexchange.net. We'll be back tomorrow to be able to talk about what's going on in the world, what happens this afternoon, how the markets close, what I see happening tomorrow when the markets open overseas. And ultimately, if you've got questions, we'll certainly be ready to answer them for you. I do have a chat room that you can enter and come on to Ustream with. You register at Ustream, and then you can chat live, and I'll be more than happy to air your questions at that time. Appreciate you listening. We'll be back tomorrow at 2 o'clock. We'll get it posted just after 3 when Michael's ready to do his thing. I appreciate you for tuning in. It's the first time back in 60 days. Hope you enjoyed it. We'll see you tomorrow at 2. Have a great afternoon. God bless you all.